Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, October the 23rd, 2025, recording this in the morning. All right, let's immediately have a look and see what's happening. Probably the biggest structural news just in the last 12 hours or overnight is this move up in oil. And of course, this is provoked by the US administration under Trump, of course, imposing sanctions on two of Russia's largest oil producers, so Lukoil and Rosneft. And of course, they're the main producers, which is sort of funding the Russian war machine. So this is designed, obviously, to put pressure on Russia and to cut their sort of income from oil. But in terms of the oil market, this is essentially meaning that the huge importers of this oil from Russia, which is China, but mainly sort of India, essentially they have to stop importing oil because if they continue to do business with these two companies, what these sanctions mean is that those Indian importers will be cut out of the US banking system and face penalties. So it's a pretty serious deal. And keep in mind that we're talking about 5 million barrels per day, which is produced by these two companies. So it's about 5% of global production, which maybe has to then go into the black market or be rerouted or maybe even legitimately cut from Indian consumption. Anyway, the point is, as we can see here on the daily chart, when we got that news, we've had a big spike up in oil. And you see here that we know it's now getting a bit of resistance. I mean, the interesting thing is that this is upending a bit of a short squeeze because this is upending this whole narrative that there's sort of a glut developing, a surplus of oil, and that in 2026 there's going to be inventories building, and that oil is sort of headed lower. And that is still in place, although we'll have to see how the global economy goes. So this is an interesting sort of period here. Will this have more room to run? And as you can see, we're finding some resistance here at the 200 and the 100-day EMAs, exponential moving averages here, these sort of orangey lines. And you can see here that oil, this is a big resistance here. And if we look just maybe to put on, sorry, let me just bring down some of my technical tools. If we bring this on the Fibonacci's here, let's, for example, use this one. You can see that's also coincides with the 61%. So that's a perfect target, and that's the easy work done. Really, what's going to be tough for, if there are any oil bulls out there, is to get through this because they've had the geopolitical pop. They've hit the 200 and the 100-day EMAs resistance, also the 61% fib retracement. And there's a lot of sort of horizontal overhead resistance there as well. So the point is here that this is, the easy part done. Let's see. It's probably going to depend what happens with Putin, Trump, India, China. So there's a lot of moving parts. But what I would say is that the structural situation hasn't really changed. And if we get sort of a quick resolution to this, and there's some kind of deal between Trump and Putin, and Trump sort of backtracks and does a taco trade, this could be an interesting short. Maybe a little bit early just today. But let's keep an eye on that because certainly that would be an attractive short position as well. On the other hand, of course, if this does remain in place and Putin is intransigent regarding the Ukraine situation, this of course could pop through here and maybe get up to test the 65. We shall see. But let's just have a quick, before we leave oil, let's have a quick look at the curve. And what I was trying to say, this is the forward, this is the oil curve here. So you can see here that we're in a pretty sharp backwardation. So the front months are definitely trading much higher. But we have this rather strange sort of plateau effect here, and then it picks up again in the beginning of 27. So essentially what the market is saying is that oil supplies are physically a little tight for the next month or two, but then, you see the price really starts to drop as we get to the end of this year and basically in the beginning of 2026. And through 2026, as I was saying, the market is expecting globally too much oil, a surplus of oil, which will need to be worked off by either lower production or more demand, consumption by the global economy, and then picking up in 2027. So, and just compare this to, let's say, a week ago. So obviously the spot prices have changed a lot. So let me just zoom in here a little bit, put this in a little bit of context. So this is where we are now, and you can see the shape of the curve hasn't changed that much, but obviously the actual outright prices jumped on those sanctions on the Russian oil producers, and you can see here that that's all of that sort of jump in price has been at the front of the curve, where we've seen about a $4.50 jump, less as you've obviously as the further out you go the curve. So that's caused the curve to steepen a little bit at the front end there. And as I say, if there's any resolution, if these sanctions are watered down or reduced, or there's a resolution between Putin and Zelensky and Trump, of course, this will do the opposite, and this curve will sort of flatten a little bit, and the outright price will go down as well. If we also just look at the spread here, I've got the CL1 to CL6, so that's the front contract for immediate delivery compared to 6 months out, and you can see here that that had been declining, that spread. At one point, if we go out to a few months ago, or actually, hold on, let's get the exact date there. What is the exact date? Oh, this is a 60-minute chart. Yeah, sorry, my bad. I thought it was the hourly chart. But anyway, it's the same principle. The point is that it had, oh, let me just see. So that's the 26th. Yeah, on the 26th of November, September there, you see it was trading at this price, and it's now come down a lot. And you can see also here the spread here. You see the spread is coming down, coming down, coming down, coming down, almost to zero. So basically between CL1 and CL6, and we actually got into a contango state for a few hours. So essentially the first month trading at a cheaper price at a discount to 6 months out. So you see, that's what I was talking about, the very negative for sort of oil price action. But again, with this sort of pop, this geopolitical sort of development, you can see here now that the spread, obviously the outright prices of the two contracts, CL1, CL6, have pushed up. But you can also see the spread has gone from negative, we're about negative 44 cents. It's now up to about $1.20 positive into a backwardated state. So let's keep an eye on this, because as I say, any sort of reversal of what's going on with those sanctions with Lukoil and Rosneft, that will cause the curve to flip again. And a beautiful trade, of course, would be to be shorting the front month, maybe along the CL6. So basically on the calendar spreads for those who do that. Anyway, very, very interesting. Okay, let's in terms of other stuff in commodities, had an interesting move on copper. Had a little bit of a breakout in copper. So let's just look at copper. This is the front contract in the US. So this is the copper contract, high grade, traded in COMEX. And you can see here we had a little bit of a consolidation for a few days, but we've had a sort of a strong push. And this does look, relatively bullish. It looks like it was sort of a Fibonacci pullback above the moving averages. It looks as though perhaps it might want to test this Fibonacci level at $5.22, or maybe even in the recent highs at five and a quarter, $5.26. And part of that is because there was some fairly bullish sort of analyses going around. There was a very bullish report from Goldman Sachs released yesterday. We just had the London Metals Week. Well, obviously in London, the Metals Week in London, pretty bullish sentiment, because the overall mining supply, so physical supply, is tightening. There's just not enough copper being produced, and as we all know, with the electrification of the grids and electric vehicles and AI data centers and all of this kind of stuff, the medium term and the structural demands for copper are there. So what we're talking about on the short term is just maybe politics and outages. And we know that the Freeport-McMoRan mine, they had that terrible accident a few weeks ago, which shut down a lot of production capacity in Indonesia. And then we got overnight, and this is probably the proximate cause for this spike up. One of the largest miners in Chile of copper, which is, of course, Antofagasta. They basically came out with very conservative production targets for this year, and also going to 2026, basically sort of saying that their production would be less than analysts had hoped, or had hoped. So this giving rise to this sentiment of sort of tightness. So anyway, so copper's sort of breaking out, which is not really the case in gold. Here we see gold just kind of consolidating after that nasty drop. Similar kind of situation in silver, although silver does have a few more sort of industrial applications. About 55% of silver, of course, is used in industrial applications. So the fact that our copper popped is probably a little bit more of a beneficiary for silver as well. And just getting back to the copper story, there's also a lot of that's probably to do with the situation in China. So let's just recap. We know that yesterday there were headlines. In fact, before I go into that, I might grab some tea. Some Earl Grey this morning. Wonderful. Okay, so in terms of China, we know they had the fourth plenum, this big meeting And this is the 5-year plan. And they did a bit of a readout. So there's the first, I mean, we won't get the full details until next March, I believe it is. But basically, we had a readout overnight. And essentially, no huge changes, but really focusing that they want, quote, a big increase in the level of tech self-reliance. So really, there's this idea that China wants to produce, the highest level of sophistication of computer chips, competition to be self-reliant, so that's interesting. And but nothing really about sort of domestic consumption and whatnot. So not a huge amount, but overall positivity coming out of that meeting, saying that the Chinese government does want to sort of stimulate the economy, remain engaged in global trade, et cetera, et cetera. So on balance, relatively positive. The other thing which is interesting is that Trump seems to be confirming that there will be a substantial meeting or a long meeting taking place in Korea at the end of this month between he and President Xi. So that's a bit of sort of positivity as well, that at least China and the US are talking. And then at a lower level, we also have Secretary of Treasury Besant, who is meeting the Chinese Vice Premier in Malaysia this weekend for substantive talks as well. So the point is that even though there's quite a lot of rhetoric, yesterday the US came out and said that maybe globally produced sort of tech products which used US software could be banned, the export into China. So there's still quite a lot of heated rhetoric, but the reality is that senior people are meeting and talking, and there seems to be some desire or at least willingness to have a dialogue, and that's positive. As long as we have that, that's going to be positive, and that's what we're seeing. Again, a little bit in copper. And whatnot. And just talking about copper, just talking about mines as well. We had that production estimate from Antofagasta in Chile. Keep in mind that today we actually have Freeport-McMoRan's earnings. And Freeport-McMoRan, of course, is one of the world's largest producers of copper. So it's going to be very interesting to get an update from their Grasberg mine in Indonesia. Like what's happening there? Is the production, coming back online faster than expected? And also maybe more of a sort of an overview of where production and demand is going over the next 6 to 12 months. That's also going to weigh or support the copper market today. So let's keep an eye out on Freeport-McMoRan, not only the earnings, but also the sort of analysis of the situation going ahead. Always in the commodity space, there was a big breakout in nat gas over the weekend, a few days ago. And that's just because the weather forecasts over last weekend did turn fairly cold, especially for the eastern part of the US where most of the consumption is, well, the population is most heavily sort of concentrated. So let's just see if nat gas can push higher. It's got quite a lot of resistance here, as you can see, at about $3.50. It's been, but if you actually go back, we've had very, very low levels. I mean, the Europeans could only dream of such prices here, and we seem to have completed. I just did it like there's a sort of a head and shoulders for the sort of technicians here. So you see we had this sort of head and shoulders, which seems to have been completed here. But you see that nat gas, from a historical point of view, we're at a pretty low level. So it's no surprise that we're picking up a little bit, but it's still just sort of in a basing formation here. And whether structurally can push out is we don't really know. We'll have to see. But also, more to the point, have to see how the winter forecasts are going in North America. And as I say, it is here at the 100-day moving average and some overhead resistance. So it wouldn't surprise me if nat gas pulls back a little bit. In terms of other stuff, again, the Fed's in a blackout today. We just having a look here at the bonds. If we look over in Europe, we can see that European bonds down a little bit. Here's the German 10-year. We see that the German 30-year is down a little bit. We see over in France as well. And that's just possibly just a bit of risk on coming into the market, and also higher energy prices. Remember that, that's a sort of a sensitive thing. Bonds in general don't like higher energy prices. And we can see here that also in the US, for example, the 30-year just sort of coming off. So bonds coming off a little bit as we have higher energy prices, nat gas, gasoline, and crude, of course, that leads into sort of inflationary inputs, at least symbolically. So that's coming off. So therefore, the question is, with this risk on, are we getting a pop in equities? Not really, pretty flat. And I think really the equity market and a lot of markets, FX markets, are very much focused on the outcome of the talks between the US and China. And also we have CPI tomorrow. And that's the first substantial data we've got out of the US for what seems like quite a few weeks at this point. And so the equities here just coming off a little bit. You see here the NASDAQ also just coming off a little bit. Russell, everything just trading very, very heavy at the moment, waiting for earnings, waiting for the CPI, and waiting to see what happens with the global trade situation. So I would say it's going to be a pretty interesting day tomorrow and then over the weekend and going into next Monday. So the next 3 or 4 trading days, I expect there to be quite a lot of volatility in the equity space. Also, just to finish off in the FX space, which has been pretty low volatility as well. You see here that the dollar index is pushing up, just grinding high. Not huge moves. If you look at everything, you can see that some of the commodity currencies. You see the Aussies up at 25 basis points, New Zealand 10 basis points. CAD is actually flat. So a little bit of a pop here in risk sentiment. The euro actually down against the US dollar, and you can see here the Japanese yen actually had a bit of a tumble, about 50 basis points. Nothing specific really. Maybe just a realization that there perhaps won't be a hike from the BOJ until maybe the end of this year, December, or maybe in January. But probably just more of a bit of a risk-off sentiment as well. And again, these moves. Let's keep this all in context. All these moves are like 10, 15, 20 basis points. So pretty limited moves. Really waiting for CPI and results of the China talks. Okay, I'll leave it there, guys. Have a great day. Keep an eye on headlines coming out of China and Russia, US, all of the oil stuff. And that's about it. No Fed speakers scheduled because they're in the blackout mode. Okay, have a great trading day, and we'll keep this going tomorrow. Thank you.